Sometimes when you're 20, the idea of this big thing in front of you is just too much. And the fact is if you take a step every day in the direction of your dreams, you will get there, and you'll get there much faster than you might imagine. It's just one step every day.
Welcome to the Borderless Podcast, your guide to traveling, investing, and living beyond borders, where we talk about living the life that you want to live, where you want to live it. From beautiful San Miguel de Allende, smack in the middle of Mexico, with your hosts, Jonathan Lockwood and James Guzman.
Welcome to the Borderless Podcast, traveling, investing, and living beyond borders. This is the podcast where we talk about living an international lifestyle, maybe having location-independent businesses, living beyond your borders, whether they be international or psychological. I'm Jonathan Lockwood here with James Guzman. Hey, James.
How you doing, Jonathan?
Well, it's time to talk about something that I really want to talk about on the Borderless Podcast, so I thought we'd jump right into it. We've had someone on before, but I'm really excited to talk to Diane Kennedy, who is an author, speaker, and investor, a highly sought-after tax strategist. I love that word. For almost 30 years, she's been saving her clients thousands and tens of thousands of dollars in taxes each and every year. As the founder and owner of U.S. Tax Aid Services, a leading full-service tax consulting firm, and U.S. Tax Aid, an online tax education site, Diane leads the research and development of innovative tax strategies that allow individuals to proactively manage their tax planning. This strategic tax planning ultimately minimizes their tax liability while simultaneously maximizing their legal protection. Her books have been consistent bestsellers, and through her intensive seminar experiences, she has helped thousands of individuals find ways to grow their wealth while saving on taxes. She says her personal goal, as well as that of U.S. Tax Aid, is to educate individuals and corporations on how to keep more of what they make. I think I'm going to make you my girlfriend. I'm sorry, Diane, but that just sounds so good to me, and I find so few people willing to speak that language. Welcome to the Borderless Podcast.
Oh, thank you, Jonathan. I'm excited to be here. And for people who don't know what happens beyond the scenes, we were talking before we got going. And I think the first 15 minutes we just spent talking, and somebody said, we ought to push the button and get this on tape. So I'm happy that we're doing that now.
Right. That's right.
Well, so you were just telling James and I that you got quite a boost. Maybe you had a boost before this, I don't know, from your affiliation with Robert Kiyosaki, correct?
Right. Yeah, we were kind of going down memory lane a little bit there. For people who don't know Robert Kiyosaki, maybe you know it as Rich Dad. The Rich Dad, Poor Dad has just been a huge international best-selling book. Well, he was my client back before any of that started. And so then as it started to take off, he kind of drugged me along to all of the seminars, and he twisted my arm and had me write a book. So the first book I wrote was actually Loopholes of the Rich 15 years ago in 2000. It was part of the Rich Dad Advisor series under Robert Kiyosaki. Boy, I learned a lot about speaking and traveling and writing books. It's an interesting way to reach more people with this message I have of, hey, there's ways to pay a whole lot less tax and do it legally.
Yeah, that's very interesting. As far as writing, I know this doesn't really have to do with the the tax strategy, but I'm curious. Writing that first book, was that tough for you, or how did you approach that? I know a lot of people would like to write something, or even have trouble with a blog or something like that. How was that for you?
In the very beginning, it was tough. I can remember I had 2 complete books written and hated them and started over again. It seemed to take forever. But once you get it down and you get the habit of writing, you really can do it. But, in today's world, 15 years ago, we didn't have blogs. But absolutely what I do now is I blog kind of on purpose. And then I'm able to put all those blogs together as the backbone for another book. So it's a way to kind of do 2 things at once. Blogging builds a list, which you can then use when you have your book ready.
Yeah, that's great. How many books do you have now? I noticed there's a whole lot of books on your usataxaid.com site.
Yeah, you know what? I'm going to have to count on my fingers. Yeah. I think I've got 9 of them. But, some of them, like the book that I wrote in 2000, and, it's great to go down memory lane with that. But the fact is the tax laws are different 15 years from now. Later. I'm currently going through and doing some updates on all of that. My latest book is the International Tax Guide, because face it, that's one of the big things going right now for people who have businesses that they can maybe take part of their business offshore or move offshore and have $250,000 they don't have to pay tax on every year.
If they're married, right?
I'm sorry?
If they're married?
If they're married, right. It's just 100,000 each. I'm sorry. Yeah,
you're going to have to marry me then. That's coming around again, Diane.
I don't know.
Okay.
But, individually, you have almost $100,000 plus a housing allowance.
Right.
And depending on where you live, that usually averages about to $40,000 a year. You don't have to pay tax.
Right.
Some rules you have to meet, but once you do that, it's a huge tax break for people.
Yeah. So what you're talking about is the foreign resident income tax exemption, correct?
Exactly. It's a foreign earned income exemption. And there's a couple of things in there, just to kind of go off a little tangent here for a second. One is that you have to legitimately have a foreign residence. You can do that a couple of ways. One is that you spend most of your time outside of the U.S. In fact, it would be 330 out of 365 days that you're outside the U.S. Or the second way, which I think more people are starting to take advantage of, is you have what's called a bona fide residence. And what that means is that you've gotten a visa to live in whatever country you are. You legitimately have established a residence outside of the U.S. Once you've done that, it isn't as tricky to have to count all those days. In fact, you can be back in the U.S. for up to 120 days in a year. So that's number one. You have to have a residence. And the second is you have to actually be earning income. Like I know you do, Jonathan. You're earning income inside the city you live in outside of the U.S. So you've got foreign earned income.
Okay, but now I'm going to ask a question that honestly I sort of would rather not ask because I have gotten two different answers on this.
Okay.
Virtually all of my clients are in the U.S. I do have some clients who are in Europe and Russia and other parts of the world, but the great majority, I'm sure 90% of my income comes from the U.S. I am living here and doing my work in San Miguel de Allende, Mexico. Am I not supposed to be earning that income from people outside the United States?
Well, it's interesting. As long as you've got that bona fide or counting the physical presence days outside of the country, you're now not necessarily working in the U.S. So it would be just like someone who is lives in Costa Rica and is a Costa Rican resident. If they do work and all their clients are in the U.S., but the work itself is happening in Costa Rica, then it's earned in a foreign country. So I think the question would be is if you're doing, like if you were commuting into the U.S. regularly to do work, that's U.S. work, even though you might be living in another country. But if you're performing that work outside of the U.S., and I think we could make an argument because of the work you do, Jonathan, that's what you're doing. Yes. I think you've got that foreign test.
Well, it is. I mean, I'm obviously earning it here in Mexico.
Yes.
It's just that they happen to be in the U.S. All right. Great answer.
That's good news.
I love answers are great when they make me feel good at the end of them. So, all right. Now, I don't want to make this all about me, but it's about to. All right. Well, so you're talking about the foreign resident income tax or earned income. I've got it wrong. You know what I'm talking about.
Foreign earned income. Yeah, we all know what you're
talking about. Income tax exemption. What else is there that a person would do who wants to live outside of the U.S. To set themselves up, well, and to pay as little taxes as possible?
Well, I think that's probably the number one. If you're living outside of the U.S., meeting those tests, that's a huge one. Remember, you also get that housing allowance. And again, it depends on where you're living. It usually comes about $40,000. Some of the things you can deduct your rent, you can deduct all your utilities, your living expenses when you're outside of the country. You can't build an asset with that money, but maybe you have that asset built somewhere else and you're paying rent for it. Bottom line is, it's just you're covering all your expenses with that. Additionally, we have clients that maybe still want to stay in the U.S. and they're looking for, well, how can I actually make money and keep it offshore? Well, there's some very specific rules you have to follow if you're going to do that. I call it the 3 C's. First of all, you got to look at where your customers and fulfillment is. Now, this is a different answer than I gave you, Jonathan, because you're living outside the country. Right. This is for somebody who'd be in the U.S. So it's a little harder standard there they have to meet. So number one, if they're making the money outside the country, fulfillment's happening outside the country. Number two, how it's owned. So typically you'll have a foreign company that's set up and maybe that's owned by a foreign non-grantor trust. If you don't know what those are, that's fine. You talk to specialists who know what that means. And then the third is what happens to the cash. That's the third C. And if the cash all comes back into the U.S. in this case, well, it's all going to get taxed. So generally somebody who's going through this process, they've got something they want to do with that money that they're earning outside of the U.S. And I'll tell you the 2 things they do. One is real estate. The second is precious metals. Those are two items that you can own outside the U.S. and still, in the case of real estate, get great tax breaks in the U.S., but you don't even have to report those to the U.S. government.
You get tax breaks. I just want to make sure. So I own property in Mexico.
Yes.
I get tax breaks on my U.S. tax form.
Yeah. So in your case, I'm sure you're still filing a U.S. form of some kind.
Yes.
And if let's say you have a rental property, well, just like you had a rental property in the U.S., you can take deductions against that. So it's and people get confused with that. They think, oh, if it's outside the country, I don't get any tax breaks.
That's great.
Not true. Now, the depreciation schedule is a little different. I mean, there's a couple of things that are almost the same, but not quite. But sometimes people are looking at how can I invest my pension fund? It's legal to invest your U.S. pension fund in international real estate as well. So it's maybe not as foreign as you thought. And the other thing, just to add more confusion into all of this, Canada, U.S., and Mexico are all part of NAFTA. And there actually makes it a little easier for people to be filing back and forth and have more tax breaks on the U.S. side because it's part of NAFTA.
Oh, that's very good. Now, as far as owning precious metals, I know there's lots of different ways you can do that. You can have allocated, unallocated. Sure. You could put it in safe deposit boxes. You can do things like that. Is there anything specifically that is any better or worse from a tax standpoint?
Well, a couple of things. One is I sometimes run into people that are wanting to use their pension money to buy precious metals. The one little thing here, a little asterisk, you can't buy collectibles with your pension fund. So you can't go buy Krugerrands or something that would be collectibles, but you can go buy a block, an ingot of gold or something physical like that. And that can be through your pension fund. If you have assets outside of the U.S., most of the time, if it's foreign investments, you're going to have to report those. There was a law that came into effect July 1st, 2014 called FATCA, the Foreign Account Tax Compliance Act. And that whole thing is just geared toward making Americans report if they're signature on checking accounts or they've got money sitting somewhere. There's two things that are exempt from that reporting. One is precious metals, and the second is real estate, like I'd mentioned before. But in this case, precious metals, if you had, for example, shares in a whole pile of gold, you owned a share of that, and it was somehow allocated or unallocated, or it's just, you don't really have physical gold, it's just shares in that. That's treated like a security, which has to get reported. But if you actually have a chunk of gold or silver or platinum or whatever it is, then yes, that would count. You don't have to report that.
Okay. And what about with self-directed IRAs? I know regular pension funds you can't, but what about those?
As far as buying like numismatics, buying collectibles, unfortunately you can't do that either. Okay. Yeah, it's just the buying. But, it's interesting because if you buy like the bullion coins that have no collectible value, it just happens to be 1 ounce of silver or whatever, that would count because it has no value other than it's an ounce of silver. It's just when you get into those collectibles. Okay.
How about let's talk a little bit about FATCA. How has that changed? I mean, this has just come into effect with the last year. We're still kind of seeing what the effects are, what it actually means. From your standpoint, what you've seen so far, what does that mean for people that, specifically Americans that are living internationally? Is there anything else that we need to do now that maybe we didn't need to do 2 years ago?
Well, it's a great question, James, because I think there's what did the law say, and then what do people think the law said? One of the backlashes. I mean, you're living in Mexico, and I used to live in Baja California, Mexico, and one of the things we saw was banks suddenly said we don't want American accounts anymore. Everybody's freaked out about what this means, and there still is a little bit of that it's almost a backlash against Americans who are trying to do business internationally. Personally, I think it's all going to just die down because it was an overreaction. It really wasn't the end of the world for these banks. But what it did do is it said, hey, you're going to have to start reporting on Americans who have accounts. And by reporting on, what I mean is the account numbers and the amounts that are in those accounts. And what they're trying to do, they being the U.S., is find people that have moved money illegally outside of the U.S. It comes down to we have to report on any accounts, and there's basically 3 different ways you do that. One is if you've got a checking account or something you sign on that's outside of the country. on your tax return, Schedule B, where you list your interest and dividends, there's a box you check that said, yeah, I've got accounts outside the U.S., and these are the countries they're in. If you've got over $10,000 at any time in the U.S., any time in the year outside the U.S., you have a form that you have to file by June 30th, separate from your tax return. And if you have over $50,000, check with your CPA. You may also have to file another form 8938 with your tax return. That just files whenever you file your regular income tax return. None of these create tax situations. There might be things happening that you do have some tax situations, but all you're doing here is reporting. But don't take it lightly. There was a case at the end of the year, Mr. Zwerner.
Oh, I heard about this.
Yeah. Oh, gosh. So Mr. Zwerner had about $1.5 million in Swiss accounts, and he realized he should have been reporting all along, and he hadn't been. And that's part of what FATCA did, is just put all the teeth into this, and there's huge penalties. Well, Mr. Zwerner unfortunately went to someone who advised him, you know what, just catch up now. File 3 years worth of, hey, here's my accounts, and everything will be fine. And that is not the right thing to do. What you're supposed to do if you find yourself in this problem, I really recommend you get an attorney who knows how to handle this. The attorney goes to the IRS anonymously, works out a deal first, and then you come forward and you avoid the penalties. Well, Mr. Zwerner didn't come in that door. He tried to come in the back door. And as a result, he ended up with penalties of $2.2 million.
Oh, yeah. That was crazy.
That's the price you pay for being honest, I
More
suppose.
than he had.
Yeah.
Right. More than he had. He had $1.5 million. So his penalties are more. And this poor guy's in his 80s. They said, well, at least you're not going to get jail time. But it's basically his wealth is wiped out. And he's trying to negotiate something, and he probably ends up surrendering it. But the thing is, none of this was taxable. He just moved money outside of the country. There was no tax. This is just penalties from not filing.
In his 80s, a man who managed to accumulate $1.5 million, who came to realize that he needed to file the proper forms with the U.S. government.
Tried to be honest about it.
Did it, and they said, F you, buddy. I mean, anybody who thinks, I'm sorry, that entity is in our best interest, or has any degree of caring about individuals, is out of their minds.
Right. Well, and, every step of the way, I got to believe he went to someone. By the way, I was an attorney. So I think in the back of my mind, I suspect somebody's checking how much malpractice insurance the attorney's got, because he's the one who told him just to file it, and he should have instead gone through and worked out a deal first. So, I think in the end, it won't be that bad. But gosh, can you imagine that stress? You're in your 80s. And now you're not sure if you're going to jail. You've lost everything. You're wondering how you're going to pay the rent on your place because your house is gone. What do you do?
Move to San Miguel de Allende?
There you go.
I don't know. Write a book, start a little colony, charge $1,000 a month. All right. Well, this has all been great. You are very informed on these issues that are of interest to our listeners. But let's talk about something now. What I thought, if you don't mind, can we talk about, well, we were calling them offshore businesses, offshore bank accounts. And of course, what we recognize now is that it just means any foreign account. Sometimes that term offshore has a kind of a bad connotation with some people. But when is it advisable for a person to open up an offshore, like international business company or any of the other entities?
Well, I talk about the tax part of it, and the tax is kind of secondary for a lot of people. What they're really after, two things. One is privacy. The other is overall asset protection. And the fact is, if you set these things up right, good luck a creditor trying to come after those. And, unfortunately in the U.S., the litigation has just become horrible. And I think when we went through this last recession, it got even worse. Of my clients, my clients all have small businesses, real estate investments. And I would say 1 out of 2 of them got some kind of stupid lawsuit that in the end, it wasn't their fault, but it's like somebody's trying to find some way to sue them. And it just all goes away if you've got this foreign IBC wrapped around it, or a non-grantor trust, or something that means that you've got to move everything to another jurisdiction. Good luck trying to fight this in Anguilla or Nevis or someplace.
Right. And so there are circumstances in which it wouldn't make sense for a person to set one of those up, and circumstances in which it would, correct?
Absolutely. Yeah, I mean, the thing is, they are going to be more expensive than going to Wyoming and setting up a Wyoming LLC, for example, which will give you some good asset protection. Wyoming's got pretty good law. I like Nevada, but the fee is like $300 a year as opposed to Wyoming is something like $100. But either way, you've got decent asset protection. This is like the step beyond when you start looking at foreign. And as far as even to the point of, gee, we want to set up part of our business as being an international business, an offshore business. Can you do it legally? Absolutely. But it's going to cost you more in accounting and legal fees to set up and maintain those structures. So is it right for everybody? Maybe not. It depends on your circumstances. That's why I always talk about strategies. Where are you now? Where do you want to be? What's the best steps to get there?
I was talking to someone recently about this who, was suggesting setting up an IBC. I think it was in Belize and also a bank account in Belize, and just billing my customers, having them, somehow wire the funds to Belize. Well, they're not going to do that. My clients are not going to wire funds. They're used to sending paper checks. More and more people are using PayPal today, but still some of the bigger, older clients like to send paper checks. And so he suggested another strategy. What would you suggest to somebody who has that issue?
As far as receiving the paper, just a comment here on Belize and an asterisk. I had heard that was one of the areas that really had problems with Americans opening bank accounts. And I don't know if that's still true. This is we're in the rumor side right now. I would, wherever you're going, make sure you can get a bank account open and can run it there. I've got a lot of clients moving to Bitcoin, doing some of the international, digital currency, the virtual stuff. It becomes easier for some of these guys to do business. And I know that some of the big companies are now doing that as well. Having U.S. checks is difficult simply because I don't know if a foreign bank is going to take a U.S. check. They might require a wire transfer in order to get the money there. And then there's a fee with that.
Well, that's interesting what you say about Bitcoin. So you have some clients that actually use Bitcoin for their business. Can you tell us how that can be beneficial?
Well, by the way, the answer is absolutely. I have some clients. They were kind of early adopters in that area too, and it's primarily people that are working internationally, and it just becomes an easy way to do transact kind of outside the banking industry. I mean, it's one of those. There are now companies you can go to verify that the Bitcoin is actual. I mean, there's things you can do now to make it right. If you're brand new, make sure you've got a good system in place and you're using one of those reputable companies, because it is possible to forge that, although it's getting much harder to do that.
But you receive Bitcoin. I mean, I'm sure it all depends on the transaction, but someone would receive Bitcoins and then transfer it to their bank account. I'm kind of trying to figure out.
Yeah, it's basically kind of like you have this virtual bank account, and you could transfer some to a PayPal account. You could I've never seen it done, but transfer it to a regular U.S. checking account. Most of the time that I see is people then use that. They pay expenses from that Bitcoin account. They find other vendors who take those.
Yeah. Okay. I've been trying to figure out some, I'm very aware of Bitcoin and what it is, how to use it. I'm just trying to figure out some more practical ways for business owners to use it. I kind of feel like holding Bitcoin itself is a little too volatile for me.
Right. It is. And that's the other thing you need to look at. It's not just, gee, I got paid for my work I did, but did I get paid in a currency that's going to be the same value tomorrow?
Right.
So how do you transfer it? It's interesting with the whole concept. Personally, I think we're going to be moving more to that. For example, my website guy is in Argentina, and PayPal has really strong limitations on how I can get money to him in Argentina. So it's, I think we're going to be moving to new areas.
Oh,
have you worked with Stripe, for example? I just know a few people starting to use that.
Yes. That's funny. I opened up an account with them and promptly forgot all about it.
Well, thank you for that good confirmation on it. I don't know anything either. I don't know. Let me bring up a subject I have no idea about. I just know people are talking about it, and apparently the fees are lower. It's easier to get it going, and it seems a little easier to work with them.
Right. For me, Bitcoin, I mean, this subject comes up a lot. I find a lot of the people, like a lot of my friends when I was living in Arizona, loved to condemn Bitcoin as if someone was advising them to put all of their assets into Bitcoin or something.
Awesome.
I mean, no, I don't. I'm sure there's probably a couple guys out there like that. I don't know any. I've dabbled in it here and there. When I see the price drop, I'll grab a half a Bitcoin or something like that. I think I've got like 3.7 Bitcoins right now. But I think it's such a fascinating technology. It's worth it for me just to kind of play with it. And I have used it to purchase some stuff.
Yeah. I was being sarcastic when I said awesome, because it's volatile. The guys that I know that do this are the ones who are trying to get off the grid a little bit from the U.S. banking system. Right. So they use Bitcoin, they're using precious metals, they're holding. And they're by the way, absolutely complying with the U.S. tax law, and they report it just like they're supposed to, even though there's been confusion for the last few years on how you report it and when is it capital gains and when is it ordinary income.
Mm-hmm. As if they didn't, that meant there was something wrong with Bitcoin.
Right.
You can do the same thing with cash, right? Should we outlaw cash?
Good point.
So this is all really great information. So if you don't mind, I'd like to get back to the issue that a person has who wants to set up one of these IBCs, but has a challenge getting funds into a bank that is outside of the U.S. Right. One of the strategies that someone recommended to me was what you do is have your U.S. LLC or corporation bill your offshore corporation for services. And that's a way that you can make this work and still have your U.S. address where they send payments.
Yeah. And can you do that? Absolutely. I mean, that is exactly what Microsoft and GE and Apple and all those guys that we heard about a few years ago that, are paying 3% tax because they're making use of all of these tax haven countries. That's exactly what they're doing. Some of the things I would be concerned about, though, look at the ownership of that IBC, because if it all comes back to you, then the whole deal could unwind. So that's the kind of case where you might have an IBC that's owned by a foreign non-grantor trust. With some planning that goes along with that. The other thing, and it's just a little asterisk, I don't know if anything's going to come of it or not, but there was a big tax bill that needed to pass at the end of 2014. It was the so-called tax extender law, and it gave us back Section 179, which allows businesses to expense equipment that they buy, that type of thing.
Right.
Well, there was a deal that went between the House, the Senate, and the President, because the President said he wasn't going to sign it unless this deal went through. And the deal is that they're going to open up discussion this year, 2015, on international companies. And one of the things that's being proposed is that anything that has 20 or 10%, there would be some issue over 20% ownership that comes back to a U.S. company has to fold back into the U.S. company. It's not the law. It's who knows if this will even come to anything, but it's just something to be aware of, to watch what's going on with those conversations.
Very good. Well, we appreciate finding somebody who keeps her finger on that pulse. And one other question, if you would. This comes up when people start to get into the foreign earned income tax exemption.
Yes.
Okay, so one of the reasons why people start a corporation, for instance, is so that they don't have to pay themselves a very high salary. So you can take a smaller salary, and that's what you pay your payroll taxes on, your Social Security, Medicare, all of that. And then you can take the rest of the money, your profit, in what used to be called distributions or just profit or whatever.
Sure.
The problem is with that exemption, you've got to have that in salary, correct?
That is correct. Now, it's interesting, though. I mean, if I were setting up something where I had a U.S. company foreign and I was living outside the country, I would probably set up some kind of foreign business or just even like a regular, what we'd call the Schedule C or sole proprietorship, to do the work myself. If I had to take the money in the U.S., and then it would pay to me because I was fulfilling that work down in Mexico or Costa Rica or wherever we're going. And from that, you can get your foreign earned income exclusion. Another thing just to be aware of, and I kind of go into this, I think maybe a little bit too much in my book on the offshore tax guide. There are countries that have deals with the U.S. as far as whether they have to collect Social Security in that country or not, whether you pay it or not. So you need to look at what the law is. It does change by country. The same is true. It changes by country if you can collect your Social Security when you're in that country. So there's different tax treaties that are between the U.S. and other countries regarding paying Social Security and receiving Social Security.
I see. So that you could limit the amount of payroll taxes that you're paying. I see.
Exactly. That was a very long explanation of yes. You can limit the amount of Social Security because what we consider foreign or earned income in the U.S. means you're paying Social Security and Medicare tax. that may or may not be the case if you're living in another country.
Okay. You offer a coaching program, is that right?
I do. We're going to be launching our new website in, I think, 2 weeks. I'll find out tomorrow. But take a look at ustaxaid.com, and there should be a link. You can go to coaching. Everybody who's signed up, we're going to be sending out an email and making a special offer. For the first 30 days, if you sign up, it's $19 a month forever. And let me tell you what the coaching program is. There's going to be 4 Fridays each month. One is on business, one is real estate, one is international, and the fourth is kind of what's hot in the tax world. What are the things we need to worry about, and what are some cool new tax strategies we've discovered? So that'll be every month. We record those sessions if you're not able to make it, and we take questions all related around those subjects.
All right. Wow, that sounds like a great deal. $19 a month. And cancel at any time, right?
Here's the deal. You can cancel at any time, but you come back and you're going to pay the higher rate.
Right. Okay. Gotcha.
So come in the first
smart.
30 days. Yeah.
You've got lots of different services and books and things like that on your website. Would you mind just kind of going through some other things that you offer as well?
You bet. Okay, so go to my site, ustaxaid.com. You'll see the blogs that I put. I do at least 3 a week. They're going to be dealing with some tax ideas for business owners, real estate investors, international guys, and that's all free. Ask questions on the blog. I'll get back to you. You can ask questions in general. I'll write a blog about it. So I really want to get people interested and involved in the tax process and learning more about it. We offer regular CPA services. We have clients that are inside the U.S., working offshore or working inshore. We have people who live outside the country and who are U.S. citizens who still need to do filings. We can work with all of that. We also, by the way, have a big clientele of foreign real estate investors, which I find interesting, foreign nationals who bought into the U.S. when the market was down and the U.S. dollar happened to be down. Amazing how many people came from outside the country into the U.S. to buy then.
Yeah. So somebody that might want to get started on a path like this, setting up their tax strategy, what would you say? Maybe an American in the United States, and they want to think about setting themselves up better. What would you say is the best first step that they should do?
Well, I actually would have them talk to somebody who does that kind of thing, maybe a trust company who's setting up foreign things. Get some general idea. Before you do anything, though, talk to a CPA who's knowledgeable about that, because sometimes you can talk to people, for example, somebody who's in Panama. Panama is really hot, and they get a Panamanian foundation thinking it's going to do a certain thing in the U.S., and it might not at all. So you need to understand the country you're going to, and then you need to understand what it's going to do back in the U.S.
Okay. And, obviously, well, I guess maybe not obviously, but I think one thing that I've noticed you talked about on your website and that we talk a lot about here on the Borderless podcast is entrepreneurship. Would you mind going over some of the benefits of having your own company from a tax standpoint?
Oh my gosh. That's like, just have a company. Don't even ask anymore. Right. Yeah. Why don't you do that? I mean, I one time went through and did the study of an average American making $50,000 at a job versus making $50,000 with your own business. And you'll pay $10,000 less in taxes. I mean, without even doing anything fancy. It's just because the employees don't get the tax breaks. I mean, it's every tax law that comes makes it harder on the employee and in a lot of cases easier on the business owner to take deductions. In today's world, I mean, I know that you, James, have got your own blog. I mean, that's a great way to make money for people. We're seeing more people moving into internet marketing, online businesses, e-commerce, and it's all ways of making money wherever you are. And that just goes hand in hand with being able to live in a foreign country and getting that great foreign earned income exemption.
We're talking with Diane Kennedy, author, speaker, and investor, ustaxaid.com. She offers a great sort of, what do you call it, Diane?
I'm not sure what
coaching program.
Coaching program. That's it. I'm sorry. She offers a great, now fill in the blank. No, sorry about that. A great coaching program for $19 a month. You can keep pace with her. You know, I want to say this. I feel this so strongly. I was 32 when I left my last job. Okay. And I was looking for an accountant. What I really wanted was a tax strategist. And I always dreamed that I'd find some grizzled, old, intelligent guy who would sit at a big wooden desk as I walked into his office. And I would explain it, lay it at his feet and say, "What do I do, sir?" And he would say, "Young man, I'll tell you exactly what you're going to do and why." I never found that guy. What I got are a bunch of great people, most of them, They're basically rule following, pencil pushing. Oh, make sure that we don't get you in trouble. Well, I appreciate all of those things. And I just never found anyone who was truly a tax strategist. I mean, I got a real impressive guy one time with all of the plaques on the wall, and he was maybe in his early 60s, and he was very confident. I said, this is the guy. He looks kind of like the guy in my head. And when I hit him with, well, what can I do? What strategies can you give me to minimize my taxation? This is before I ever planned to leave the U.S. Deer in headlights. And then he looked at me as if he was asking me and sort of shrugged and said, open up a 401k? Okay? This is what I've had my whole life. So if folks listening to the Borderless podcast, if you'd like to live outside of the U.S., or you already are, and one of the reasons is that you'd like to save a lot of money, I cannot comprehend why you wouldn't try to keep pace with Diane Kennedy, our guest today on the Borderless podcast. You've been so helpful to us, and I just feel like I'm already signing up for your offshore tax guide. How recent is this, Diane?
Oh, this just came out. Funny story. My first came out. I first printed it in December. We're on our second printing, and I think my husband told me we just have 6 books left, and so we're doing our third printing right now.
Okay.
So yeah, it's brand new. The book was I finished it less than a month ago.
Go to the website and get the book, people.
Yeah. So it's an actual book. It's not an ebook.
There is a book, and I believe it's up on Kindle now, and I don't even have it on my website yet because it was just submitted, and I think it came live today.
I see.
So if you come to ustaxaid.com and maybe give it 2 days, and you'll find the Kindle version on there.
Mm-hmm. Okay, beautiful. Fantastic.
But it's hard to autograph a Kindle version. I haven't figured out how to do that yet.
It is.
Digital autograph. Yeah. Well, there's all kinds of useful information there. So, I definitely recommend people go and check out that website and see everything that she offers there. And that new coaching program that you're offering sounds like a great deal as well. I have one question that I like to ask the people that come on the Borderless podcast. And that is, if you could give somebody some advice, or maybe you yourself, your 20-year-old self, what is the best piece of advice that you would give yourself?
You asked the question about entrepreneurship, and I think without a doubt, if you don't have a job now, or if you do have a job and not a business, start a business, side business, part-time job, business, whatever, get started. The other thing is to think about, sometimes when you're 20, the idea of this big thing in front of you is just too much. And the fact is if you take a step every day in the direction of your dreams, you will get there, and you'll get there much faster than you might imagine. It's just one step every day.
That's absolutely fantastic advice. And thank you so much, Diane Kennedy, ustaxaid.com. That's ustaxaid.com for coming on the Borderless podcast.
Thank you.
So as always, we ask, what did you think about Diane Kennedy? Would you like to share your thoughts on this podcast? Feel free to go to borderlesspodcast.com, click on the big Join Now button, and get involved in the conversation. We'll give you access to our private Facebook page. Also, as always, if you would rate, review, and subscribe to the Borderless podcast, it would help us out a great deal. Join us next week for another Borderless podcast.
Thanks for joining us for the Borderless podcast, traveling, investing, and living beyond borders.